Hey, what's going on everyone? It's Alwyn here with another video. I hope you guys are all having a wonderful day as always. Today we're going to be going over Jim Cramer's Mad Money from actually last Thursday, which is April 1st. Again, as always, make sure you guys do go down below and subscribe to actionalertsplus.com as it is a very, very good service. And also subscribe to his Real Money column, which he posts on every day in the mornings. So looking at the market, as of last Thursday, then we'll get into kind of today's markets a little too. We noticed that just like today, the Dow was up 0.52%, S&P was up 1.18%, and the NASDAQ was also up 1.76%. So a very, very green day overall, similar to what we're seeing today. Today closed as a very, very good day at 4 p.m. So very good days overall, so kind of what's happening. Let's first get into buy, sell, and holds. So again, what are we kind of going for here? Buying into the cyclical plays, right? Jim Cramer, we will talk about, did kind of change, how his perspective, right? As we're seeing these last couple of days on Thursday, what he said is that expect a couple of these counter trend rally days, which we'll get to here, so, in following. But he says that, guys, the great reopening is not going anywhere, right? That's the thing that we're all focused on, why we're concerned about these comparisons, which we'll get to here in the next segment. So again, we want to be buying into cyclicals when we can. This includes the banks, such as financials and industrials. Okay, Caterpillar is a really good industrial that he talked about, especially their supply, right? We covered this in one of last week's videos. Their supply, or maybe last, is very, very limited, right? They're always like, for the last 10 years, they've bought back over 20% of their share. So their supply is limited. They're not like a tech company where they pay their employees in stock options. At least most of their employees don't get paid in stock options. So the supply is less. They don't have secondary offerings, right? There's not a lot of IPOs of these companies, and there's so many mergers that have occurred that there's so few like good industrial names to kind of look at. Right, so Caterpillar, Tesla, Jim Cramer was on today morning. We'll kind of mix some of this in. He said, guys, don't be buying the derivatives of Tesla, right? Don't be buying Lucid Motors, Fisker, if there's good news with Tesla, right? Obviously, we heard a lot of good news. There were price targets for, $1,000, and they had really, really good numbers that came out. If that's the case, buy Tesla, right? Don't buy any derivative. Don't buy any other electrical vehicle charging plays, right? Just buy Tesla, right? And he said Tesla is a good buy. It's a long-term position, right? If you're looking to, trade it, and maybe not down here because you can, have short-term pain because of the market we're in, because we're not, favoring these higher multiple stocks, right? And then we have, obviously Taiwan Semiconductor, which is obviously seeing a lot of demand with the shortages, and that's a pretty big deal. And then Applied Materials we'll get to here in the next segment, which is having an analyst meeting, which is tomorrow. Jim Cramer says that's a big deal, and you can, there's a good trade there. In terms of Starbucks, it is, kind of a sell, trim. I would say it's a trim, or you could hold it, whichever one. If you have some good, amount of profits, you can trim that into strength, or you can kind of continue to hold it for the longer term. If you need to free up cash, Jim Cramer said, feel free to sell some shares. Tech and growth, obviously, we want to trim out of that, even though we're seeing counter trend rally days, such as the one today. And also sell out of these SPACs. Obviously, the SPACs, even the good ones come down with the bad one. And then sells were PDD and CAN. And he said instead of CAN, just stick with Taiwan Semiconductors. So that was kind of his buy, sell, and holds there. Let's get right into his first segment here, which is focusing again on this counter trend rally that existed, right? So in today's market, even today, same as April 1st, same as today, bad news is good news, right? That's kind of the trend. But that was actually really the trend as of Thursday, because we did have bad, employment numbers. But on Friday, we had really good non-farm payroll, which turned out what happened is that we kind of went over this today morning, on TV on Squawk on the Street, is that what's happening here, we had a very strong employment number on the non-farm, which came out Friday while the markets were closed at 8:30. And today was our reaction to the non-farm, those numbers. They were good numbers. The employment increased more than expected. But what happened is that the wages did not inflate, right? There was no wage inflation. So what Powell said to prepare for, when he's giving a speech, he always says, guys, prepare for commodity inflation, right? Plastic, lumber, steel, things like that, right? Those prices will go up in the short term. They're transitory issues. But we should, he didn't say anything about, specifically wage inflation. So maybe if there is a lot of wage inflation later on, that's going to force the Fed later on to, raise rates. So that wasn't a concern in today's market, partially why today's market was good, green overall across all the indices. But going back to, Thursday, what was kind of happening there is that, we did get some bad numbers. So obviously Bad news is good news. Why? There's not as much inflation scare, right? So the tech stocks that all the Robinhood investors are in are going to tend to go up or have an uptrend that day. So that's partly why we saw all three indices, increase in value there. And then in terms of, obviously, so we covered reduced, inflation concerns. Unemployment was, there's unemployment, so that does not, indicate inflation. And then, higher stock prices overall. Why? Because there's monetary easing that continues, right? There's just free money kind of just flowing in general in the markets, right? So in terms of his game plan was the next segment. What are we looking out for? Friday, obviously, we saw the non-farm payroll, which came out. Numbers were greater than expected at 8:30. On Monday, this is just mainly the reaction to all this, non-farm payroll stuff. Obviously, very strong numbers. Wage inflation was not there, so the market trended upwards today at the close. Or throughout the day, I should say. Tuesday, we're looking at the analyst meeting for Applied Materials. Jim Cramer says this is obviously the strongest stock in the stock market, along with KLA Corp and also Lam Research. Those are the people who are actually manufacturing are creating these, machines that are used to make these semiconductors, right? So they have a lot of pricing power, which is what we talked about in Micron, what we will be talking about in Micron, because there's this shortage, right? So there's this huge shortage, and we also know that Taiwan Semiconductors spent over, or they are going to spend $100 billion in equipment in the next 3 years, so pretty big deal there. So Jim Cramer said that the Applied Materials should have a lot more room to run, essentially because Micron is also having a very, very good quarter. There's incredible demand for these semis and their prices. They have a lot of pricing power, which means that if they're in semiconductor shortage, they can just rise the prices. That leads to larger margins and more profitability, right? And then we also hear from Paycheck tomorrow, which, he says it's going to go down no matter what they report. So he says buying weakness there. And Wednesday, what we will be seeing is something very important, the mortgage application numbers. So this will really tell us the strength of the housing market and try to, tell us, indicate to us whether that momentum in the housing market has really continued. Because we all know that we're in this is one of the strongest themes in the entire market right now, the housing market, right? So it should remain good as long as the rates, right, these on the mortgage rates and just rates in general, interest rates remain low, right? If they go up, then people, the demand for these houses slow down. And keep in mind, throughout this entire process, rates need to stay down, and obviously we know that there's de-urbanization, right? People are moving from cities to suburbs, and that trend is still continuing, and people are even moving to the countryside, and that's why he always recommends Tractor Supply Company as always a good, reopening play, just because people are moving out more frequently to the countryside now. And then the biggest thing is that remote's here to stay, right? Remote's not going on anywhere, and a lot of workplaces are turning into hybrid now. So that's also going to be a situation where residential real estate is going to also, see further, consistent demand, not just like, transitory or shorter term demand. And then Thursday, what do we hear from? We hear from Constellation Brands. That's going to be a big one that we're going to have to look at. And they did have a negative research piece that did come out that suggested that beer and liquor, the beer and liquor part of the company specifically, were going to be weaker. Why? Because the weakness in Texas because of Superstorm Uri, which may hurt their earnings, at least for that part of their business. And then we also hear from Conagra, obviously they're big in frozen foods. So they did have good numbers. They had a couple acquisitions, which were good. And it could slow down, obviously, in the time of the great reopening. As frozen foods kind of go out of style. Nobody wants to do their dishes anymore. Everybody wants good quality food and to put in less work, really. So, maybe, kind of wait on this one. Let's take a look at kind of what's going on there as of Thursday. And then Levi's. Obviously, Levi's is a good reopening play, right? Going into the pandemic, they, obviously it's a retail apparel company that people were really worried about, but coming out now it's a reopening play. So we better, watch Levi's to kind of see, into the earnings. And then as of Friday, we get the Producers Price Index. And this is right now the biggest fear of this week, I would say, or the biggest kind of event that we're really looking forward to. And it's that inflation, inflation is there in lumber, inflation is there in plastic, inflation is there in metals, inflation is there in semis, right? And essentially what this will tell us is that if the number is high, then there'll be an inflation scare, tech will pull back. And that's why right here, we'll talk about this here, we might have, a couple counter-trend rally days where tech goes up. But then with this number that comes out on Friday, there might be, inflation concern signs. that might send tech down at the end of the week or closer to the end of the week, right? But Powell said that inflation, guys, will spike near term, but it's only transitory, it's short term, right? So the market should be prepared for a spike, but in reality, we know that's not how the bond markets act, right? They take these things pretty seriously, regardless of what, Fed Chief Powell says. So the biggest thing is that the counter-trend rally does continue. Jim's thesis is that it will be continuing at least for a couple more days here, a few more days before it actually ends and reopening comes back, and the Wall Street fashion show is how he refers to it. So that's kind of what we're looking at there. Then, what he brought down for his first executive decision was Micron, and obviously there is a huge chip shortage that gives them a lot of pricing power. Like I talked about before, they beat elevated expectations, so that was a very, very good sign. They released great forecasts. They just had a terrific quarter overall. Overall strength across all areas or all sectors of their company. The main, DRAM, which is I believe 75% of their business, is doing very well. They have very, very strong demand in that segment, and every application, needs, the semiconductor memory essentially. So it's super, super important, and they are confident. CEO said that he is confident in strong financial results over the next several quarters. So that's definitely a good sign and a reason to hold it long term, especially with the semiconductor shortage and so high demand and very limited supply. So that's definitely one thing. And then obviously they are a manufacturer, right? They're a manufacturer of, foundries, and they're actually the only ones pretty much in the US. So it's a pretty big deal, right? They're the only company in the US that makes these semiconductors that are used for memory and storage. So it's a pretty big deal there. And then obviously they are, a part of the secular growth trend, which might not be completely in style now because of these, fears with not having enough semis. They're going to be, having that, that pricing power, which essentially gives them more room, more margins, which leads to more profits. So, they do have essentially multiple year basis, that their supply is aligned, so they're not back at all in supply. It's just that their demand is surging a lot. They do expect to meet demand, which is a good thing. Obviously, like I said, secular growth is what they are, but the stock does go higher, from where it is priced right now. And then in terms of QuantumScape was the next big one. QuantumScape did get a $100 million investment because they reached a technical milestone, which the CEO came on and talked about. Jim Cramer notes that, hey, this is, obviously a high-flying growth stock, which is not liked right now on the Wall Street fashion show because inflation concerns that erodes the future earnings power. Right, so he said it is a real company, they have real technology, they have real partnerships, okay? And the most important, foremost things, that they're careful with expectations. Obviously, we know Romeo Power, they slashed their expectations, ridiculous amount by 80%, and those were just set 6 months ago. So it seems kind of ridiculous, how can you set 6 months ago expectations and just dramatically cut them? But QuantumScape has been very, very careful with their expectations. So in terms of what this milestone was, the milestone essentially involved obviously their battery technology. On a specific cell, they had to bear it in specific dimensions at a specified power, at a specified temperature, and a specified cycle. So they had to do it in a very compact area, but they're making this battery cell, that they're trying to make sure it hits all these components, right? One battery cell which hits all of these kind of criteria or conditions, right? And all of these milestones were hit, and that's why they had this big $100 million investment with Volkswagen that was invoked, or unlocked, I should say. So the biggest thing is that in terms of government policy, Jim Cramer asked, right? The government is obviously very, very supportive of EV, especially with the Biden administration. But the government policy, Jagdeep Singh, the CEO of QuantumScape, says is still not enough, right? They still need more funding, and that's why they go to the public market in order to raise funds. And we know they did have an offering at $40 a share, which did tank the stock from $62 to I think $42. But they did have that offering because they still need more cash, right? So what they say is that at the end of the day, in order, government can't subsidize everything, so they have to become very, very competitive over the long term with internal combustion engines, right? They have to become very, very competitive with them. That's how they will attempt to close the gap with these IC engines. That's ultimately what they need to do, right? And obviously Volkswagen is huge, so they wanted to highlight the importance. This is not a small deal by any means, right? Volkswagen is selling over 10 million cars a year, and they are planning to go all electric. So it's a pretty huge deal. One thing that I do want to point out is that he said that QuantumScape will not be meeting all the demand as fast as possible, especially for Volkswagen. They are a big company, but that's something to note, that the demand is there, but the supply, is very, very limited at times. In terms of their cash, they do have $1.5 billion on the balance sheet, and the cash in the bank is good enough to fund most of what they're going to be doing for this year and the next year, in terms of research and kind of development there. So that was QuantumScape, really looked good there in terms of how the CEO was talking about it. And Jim Cramer says this is a real company, so as it goes lower, there's more opportunity to buy since it's a real company. Right, in terms of his no-huddle offense, he talked about AMC and kind of what's going on there with the CEO, Adam Aron. And obviously he has saved this, AMC, his, company from bankruptcy, almost like 5 times since the pandemic has happened, right? And now we're looking at a 6th time that he's having to save, 6th and hopefully final time that he's having to save his company. So he is having a share issuing of $500 million, which is roughly $4.7 billion. This resulted in the stock falling 8% on that news. And essentially, he can sell, these shares to do what? Obviously raise capital, and using this capital, he will be able to, strengthen the balance sheet, right? He will be able to acquire, competitors that have been beat down over the time of the pandemic and, get really stronger and kind of be the last man standing in that kind of industry. So cleaning up the balance sheet, acquiring competitors are one of the biggest things here. Obviously, this wouldn't have been possible without our Wall Street bettors, which took the stock from $3. That was heavily shorted, and there was so much pressure for it to go down, whereas, they were shorting until it went to zero, essentially. While actually AMC needed money and they would have went bankrupt, just at the right time, Wall Street bets saw the short position on AMC. They came around, they busted the shorts, right? So the stock went from $3, Wall Street bets took it to $20, and now it's fallen back to $10 a share. But still, overall, they're up pretty big since, they've been, almost in that, bank of, bankruptcy, or that, kind of corner of bankruptcy over 5 times, this being their 6th. And now, the offering is essentially very additive or very, very helpful for the company. Why? Because then now, that means they can raise money, they can improve their balance sheets and things like that, so they can prevent bankruptcy. A lot of times we always think about, offerings are bad, right? They dilute the current shareholders, right? So it's bad in a way. It reduces the stock price, right? At least in the shorter term. But for AMC, it's good because it's preventing them from a bankruptcy. In terms of GameStop, GameStop probably doesn't need the money. That's why they aren't raising as much money as AMC is. AMC obviously needs capital, and whatever they're doing right now in terms of raising money to pay down corporate debt will help the company and make it more valuable over the long term. Hopefully you guys all enjoyed the video and learned something new. I thank you all so much for your continued support. Make sure to go down below and drop a like if you did enjoy. Subscribe to my channel if you're new. Turn on those post notifications so that way you're aware of when I do upload my next video. Comment down below. Till next time. Peace.